Hey guys, welcome back to the channel. Today we're going to be talking about banks. What is a bank? What's the purpose of a bank? And why they're not going anywhere. Even in all this crypto stuff going on, like banks aren't going anywhere, right? So let's get into it. What is a bank? A bank is just a financial institution licensed to receive deposits and loan money out, right? Banks can also provide services like currency exchanges, safety deposit boxes, wealth management, stuff like that. Now, there's a bunch of different kinds of banks, right? Retail banks, commercial banks, corporate banks, and investment banks. Okay? So, in most countries, banks are regulated by the national government or what's called the central bank, right? So, banks take customer deposits in return for paying customers an annual interest rate. Right? Now, the bank then uses the majority of those deposits to lend to other customers for any type of loan that people qualify for. Right? The difference between the two interest rates is basically how the bank makes money. Right? That's their profit margin. Right? So the main purpose of a bank is going to be keeping the money safe for customers, offering customers interest on deposits, helping to protect against your money losing value against inflation, which, if we're being honest, leaving your money in a savings account, it's not going to do much for you. And then banks also lend money to firms, customers, and home buyers. And then they offer, like financial advice and related financial services, insurance, yada, yada, right? So, one of the first things we're going to talk about is going to be the safety of deposits, safety deposit box, stuff like that. So banks are, a lot of times seen as a secure place to put your money, to store your money, right? It would be impractical and really risky to keep, say, all your money under your mattress, right? Way back when people would often pay the really early banks to keep their money and assets safe, right? It also saves people worrying about their money. In the UK, commercial banks are guaranteed by the Bank of England as a lender of last resort, right? So that means that consumers see them as incredibly safe to deposit their money, right? You want to make sure your money's safe. No one's going to steal it. It's really hard to. I mean, when's the last time you heard of a bank robbery, right? Like it doesn't happen. Um, Maybe in like incredibly small towns, but still very unlikely. So the next thing we're going to talk about is going to be interest on deposits. Okay, so commercial banks pay interest on deposits. So for current accounts, that can be very low. Um, but for savings accounts, um, I don't want I don't want to say it can be really high, but it can be okay, right? In a period of inflation, interest rates on deposits are very important for maintaining the real value of your savings, right? Like, let's take an example. If inflation is, say, 4%, then keeping cash will see the value of savings decrease in value. But if the bank is paying an interest rate of 6%, then the value of your savings is actually higher, right? It'll go up, right? So for some customers, pensions and stuff like that, interest payments on their bank savings can be kind of a big deal, right? Because it would be kind of like how some people invest in bonds to try to keep up or barely outpace inflation. So they're trying to be as safe as possible, right? And there's different types of banks accounts, right? You got your checking accounts, which are accounts enabling easy and quick access to money. You can withdraw the money, you know, whenever you want, and you can have features such as like your debit card and stuff like that. The interest rate on those accounts, which I know usually there aren't, like in the U.S. there aren't, but like in the U.K. there is, and they can be really low because the bank needs to keep enough liquidity to meet the demands of customers to withdraw. Savings accounts typically have limits on the amount of money that can be withdrawn at once. Like you can't just go take it all out. Like anything above a certain amount, like you gotta think. You can't go to the bank and ask to have like $1 million, right? You have to give them advance notice. It might take a week or two, stuff like that, right? And a lot of banks, uh, they enable, by doing this, right? It enables the banks to pay a higher interest rate as the bank needs less liquidity, right? Because they have to keep a certain amount of bank money at the bank to be able to do day to day business. So you have to make sure you're giving them enough notice, right? So the next thing we're going to talk about banks doing loans. So a bank they can make so much more money instead of relying on the interest rate, um, of the money. Like instead of relying on you putting money in and then like investing it, a lot of banks, like their type of investing is loans, loaning you money to buy a car, a house, education, stuff like that, right? So a bank can make a lot more money by using a certain amount of its deposits to lend to other people. Um, if a bank pays, say, like 2% on bank deposits, but lends money to, say, consumers at 6%, it can make just the profits just start to skyrocket, right? A bank just needs to keep sufficient liquidity to meet the demands of customers to withdraw money on a day-to-day basis, right? So as long as they're good, you know, however much they're supposed to keep at location, right? Like I'm sure there's like a certain amount of money that a bank's not allowed to go under, right? Before, they start having red flags pop up, right? X amount of dollars has to be within the building at all times, blah 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 blah. So you get the idea. You go deposit $100 and say 100 people go deposit $100, then the bank can lend out a portion of that, right? And say, okay, we've got $100,000. You want to go get a car? Here's a $40,000 loan. Now the bank might be paying each of those individuals a 2% interest rate, which is kind of high, honestly, probably closer to 1%. But when they loan that $40,000 out for a car loan, they could be getting a 6% interest rate back. That 5% difference is how much that's their profit margin, right? So they're making a lot of money. Um, Other features, right? The banks can have is they're gonna have ATMs, advice for financial planning and all that other stuff. Methods to make international payments. A lot of banks are now they offer the electronic transfer of money through like whatever different system they're using. Basically kind of like Venmo, but through your bank. Like a lot of banks, they might have bought out a company that does that type of thing, and then absorb that company so that now you use that company that's a subsidiary of the bank to send money electronically. They might have special offers for customers, like arranging travel insurance and stuff like that. Um, More and more so these days, current accounts come with like a range of like extra stuff. It can be anything like put deposit $100. Well, like okay, for example, when I opened my bank account, it was if I deposited $100 on the day I opened my account, the bank matched my $100 and gave me that $100, as well as I got a free membership. Um, with oh man, I can't even think of who it is now because I canceled it, but it was free like travel insurance and stuff like that, which I didn't need, so I ended up canceling it. But they can offer you so many things just to start an account because they just want to get your money in the door. Because as soon as they see that, like, oh, this every other week this guy has direct deposit of $2,000, so we can increase the amount we're lending by $1,000 a week, or $500 a week extra. You do that times 100 people. All of a sudden, people are lending, thousands and thousands of dollars out, and you think if they're able to lend an extra $100,000 a week at least a 6% interest rate, I mean they're making a lot of money. So just trying to get y'all in the headspace of why banks aren't going anywhere, right? Like you're not gonna be able to go to any of these cryptocurrencies and borrow that money to go buy a house, right? Or at least not anytime soon, right? And by the time that becomes a thing, I would expect the banks to have caught up and have a way for you to use cryptos through the banks, even though that's not the purpose of crypto, right? The purpose is we don't want the banks, right? We don't want the banks, but it's just it's food for thought. Don't think the banks are going anywhere anytime soon, right? It's not going to happen in the next 5, 10, 15 years, right? This is way down the line, right? So, think about it. Let me know about your comments down below. Let me know what you guys think. I'm curious what you think banks are going to do, or, how they're going to join the crypto, I guess, revolution, as you want to call it, with the decentralization. I hope you guys enjoyed this video. Go ahead and give this video a like, subscribe, and hopefully I'll see you guys in the next video. And until then, y'all be safe.